Hello, everyone, and welcome to our July 23rd webinar to kick off the Science-Based Targets Initiative Financial Institutions Project Tool Beta Testing and Guidance Feedback. We are very happy to have all of you joining, and we'll just pause for just a moment to let some other people join and see that there's still a number of people logging on. Okay, welcome everyone to today's webinar. My name is Nate Aiden and I'll be opening the webinar. This is a webinar by the Science-Based Targets Initiative, which is a collaboration between CDP, the UN Global Compact, the World Resources Institute, and WWF. And today we will be focusing on the launch of our tool, beta testing process, and the guidance feedback that we'll be sharing soon. So we are recording this webinar in order to be able to share it globally with time zones that are asleep right now. So just be aware that if you do add any questions or participate, it could be included in the recording. We welcome all of you to submit questions through the Q&A box. There's also a chat box that's enabled, but the Q&A box is more appropriate if there are questions that you'd like to broach for discussion. We have a fairly broad lineup of speakers for today's webinar, as you can see here on the slide. So I'm Nate Aiden with the World Resources Institute. I'm leading the Science-Based Targets Initiative Financial Institutions Project. And I'm joined today by my colleague Chandan at WRI, and Donald, who's managing the project, the tool development project from WWF, and Chris Weber from WWF, and Owen White from CDP are from the SBTI core team here. And then we're also joined by Truman from OS Climate, who's the CEO there, and Don, who's a senior business analyst with Ortec Finance, who are our support team, part of our support team for the tool development here that we'll be describing, the beta testing process. As I said, the two sort of goals of today's webinar are to launch the tool beta testing and to describe the guidance that we'll be sharing for feedback. We have an hour-long agenda lined up here, so I'll just begin with a brief introduction overview of the project for those of you who aren't familiar with it. And then I'll pass it to WWF colleagues to talk about, WWF and CDP colleagues, excuse me, to talk about the development of the temperature rating method and provide an introduction there. And then we'll pass it to our tool developer colleagues to talk about the tool and what they've done to produce the beta version and the tool beta testing process. We'll have a little demo. And then we'll shift it back to Chandan to talk about the guidance draft. And then finally, we'll have some time for some discussion and questions and answers. We'll pause at the end of a couple of these sections as well. And so would encourage you to add your questions to the Q&A box as we go. But we'll save sort of the broad questions for that final discussion. So the project was launched a couple of years ago in recognition of the central importance of financial institutions in low carbon transformation, which is the obviously the focus of the SBT initiative, but also reflecting the importance of finance is reflected in the Paris Agreement, Article 2.1c, for example, which specifies making financial flows consistent with a pathway towards low greenhouse gas emissions and climate resilient development. This is an important area for emissions accounting and for target setting. And so we've been taking a very regimented approach here. But there's been great enthusiasm among financial institutions as reflected in the list of 55 that you can see here on the screen of financial institutions which have already publicly committed to setting science-based targets. I'd say that these are the tip of the iceberg in terms of actual involved financial institutions in this process. And some of them joined right when we began our call to action back in 2015. And one of them joined just last month. So it's been an ongoing process. As I said, I think many other financial institutions are waiting in the wings to see what we publish with the framework. But we're glad to work with all of these and other financial institutions. It's quite a broad group, as you can see, with different types of financial institutions coming from more than 20 countries. And this is consistent with the SBT initiative, where we intend to be a global initiative and not just a club of companies or financial institutions from one particular region. In terms of the project, I already mentioned the SBT initiative partners, and for this particular project, WRI is managing the financial institution project, but we're working closely with CDP and WWF, as well as our technical partner Guidehouse, which is helping with some of the guidance and method development tasks, for example, as well as OS Climate and Ortec Finance, who are the tool project partners that we selected through an open RFP process earlier this year. The framework that we're developing has 4 components. The first is a set of methods that we road tested last year, and those are sort of the foundations for setting targets for financial institutions' investment and lending portfolios. The second is a set of criteria which are specific to financial institutions, and we have been improving and gathering feedback on these criteria for the past 8 months or so, including a series of workshops that we held in London and Tokyo earlier this year before the pandemic. This webinar today, as I mentioned, is focused on the last 2 components of the framework, which are the tool and the guidance document. The tool that we'll be presenting today covers 2 of the methods that we've developed for this project. And so you can see here on this slide how we map those methods to particular asset classes. In this case, they cover corporate instruments, and the 2 methods that are covered here are portfolio coverage, which is sort of a financial sector analog to our supplier engagement targets. And the intention is that this method helps to guide engagement of financial institutions, of their investees, to set their own science-based targets. After some very helpful feedback from financial institutions and other stakeholders, we've refined this method so that now it's set so that the financial institutions engage their investees such that they will be on a pathway to have 100% coverage by 2040. And that's a linear pathway, which is consistent with what the SBT initiative does with companies. The second method covered here is the temperature rating method, which my colleagues will be describing in much greater detail. So I'll just leave this very simple description here. But this is sort of providing some context here. The other thing to note is that this tool does not include the SDA, the sector decarbonization approach, and the SBT initiative has a separate SDA tool that is distributed through our website. It's a simple spreadsheet tool, which is independent of the tool which we'll be describing today. At some point, we may integrate them into a financial sector tool, but they are not presently linked or related. Some of you may have been involved with our earlier stakeholder consultation process around the criteria. And the role of the criteria is to link the different aspects of the framework in terms of the methods and tool and guidance. And they also serve as the fundamental requirements of the SBT initiative for reviewing and accepting and publicizing targets, which is our goal with this project. And so this is just a high-level description of the criteria. And I'll just say that these will be included in the guidance draft that we'll be sharing after this webinar. At this point, I'm going to pass the mic, so to speak, to my WWF colleague, Donald Linder, to describe the tool development process and some of our goals. You're muted, Donald.
There we go. And I'm going to pick up pretty much where Nate left you guys. So thank you very much, Nate. Our thinking around the tool here for temperature rating and portfolio coverage methodologies is that it's going to be an open source solution. It's going to be transparent so that you can see exactly what's going on, both in terms of input and output data. It's going to be data agnostic so that you can use pretty much whatever data source you want, as long as that data source has obviously the required data points that you need in order to do this, set these targets. And it should be able to work within any user interface. So whether that is your homegrown solution or whether that is a solution from a commercial service provider. And it's designed to be, first and foremost, a workflow tool for front and back office people. So compliance and naturally in risk management, but also more importantly, financial and ESG analysts and portfolio managers. I'm gonna come back to this, and we're going to discuss this a lot more in detail later. But for now, I'm going to hand over to Chris and to Owen, who's going to describe what the temperature rating methodology is all about.
Great, thanks, Donald. Can you just go to the next slide so we can just start with some context. So first of all, I just want to maybe give a quick introduction to how this tool development in particular relates to the underlying methodology that we have developed. So the methodology is a fully open source public methodology that allows us to translate targets into temperature scores. This was developed by CDP and WWF. It has gone through a public consultation process, and now we have a beta version of that methodology publicly available online. And that version of the method will be used as part of this beta testing. We see this method ultimately, as I said, as being an open source approach that many different solutions can be built from. The SBTI target setting approach is one of those, but we expect that many different data and service providers will build their own solutions based on this public methodology. So the next slide just sort of gives a little bit of background into the methodology and kind of how it relates to the SBTI. So if we can just go to the next slide. Yeah, perfect. So the goal of this work was essentially to expand what we're already doing on the SBTI corporate side, where companies submit their targets to the SBTI to be validated. Currently within the SBTI, we classify targets against 3 long-term temperature goals. So these are the temperature goals outlined in the Paris Agreement: 2 degrees, well below 1.5. But the goal of this work is effectively to expand the range of temperatures that we can assess targets against. So this is looking at a much broader temperature envelope, all the way from 1.5 up to about 4 degrees Celsius. And the second major goal then is also to be able to have a scalable method that will allow us to essentially assess any public greenhouse gas emission reduction target. So right now, through the SBTI process, it's a voluntary process where companies must submit targets. We have around 400 approved targets, but we want to be able to now assess a much broader universe of companies that are not necessarily SBTI targets, but they are public valid greenhouse gas emission reduction targets. So this method will allow us to essentially assess all public greenhouse gas emission reduction targets against a much broader series of temperatures. So actually, I'll now hand you over to my colleague, Chris Weber, who will describe in much more detail the actual underlying methodology and the various steps involved in that process.
Thanks, Owen. people keep saying in much more detail. I'm going to give the 2-minute version of the methodology, which is, I should say, available on a recorded webinar for those that want to hear the hour-long version of how this will work. So check the sciencebasedtargets.org website for the link to that webinar. Essentially, the methodology it works in 3 steps. As Owen mentioned, the core tenet of the methodology is the translation of GHG reduction targets to a temperature score, and that's the first step. Is essentially what we do is take a GHG reduction target, which can be an absolute reduction target or an intensity target. So think like GHG per revenue or GHG per ton of steel produced, and so on. And use the scenario envelope from the IPCC special report on 1.5 degrees, which covers that broad range of temperatures, to basically benchmark the target over whatever time frame it covers, from kind of 5 to 30 years, to the broader temperature outcome in 2100 that is indicated by the set of scenarios. That gives a score at target level. But then we need to basically turn the target level score to a company level score, because for corporate asset classes, obviously investors are invested in a company. There's 2 steps that need to be done here within the converting to a company. The first is dealing with companies that don't have targets. So there we use a default score methodology that is basically based on a very simple approach that says if a company doesn't have a target, we're going to assume that they are going to proceed along a business as usual pathway, which leads to a temperature outcome of approximately 3.2 degrees C. And I'll say we are still very much considering revising how we're doing that baseline, or the default rather. And secondly, the question is, how do you do it? How do you combine targets when companies have multiple targets? Say there's a company that has a scope 1 and 2 absolute target and a scope 3 intensity target. Basically, we're going to put the 2 together based on the company's GHG profile. And similarly, if they don't have a scope 3 target, we would be using the default score for that portion of their profile. That leads to the score at the company level. And then the final step, of course, is to aggregate the company level scores up to the portfolio. And we've proposed a series of aggregation steps or methods that might be appropriate here, based on the kind of the weighting in the portfolio, the GHG intensity of each constituent, and so on. Again, if you want more details, please see the online webinar. But for now, we want to give as much time to look into the tool as possible. So I will pass back to my colleague to introduce to the tool.
Donald, I think you're muted.
There we are. You can hear me now. Good. Sorry about that. So as I said initially, the goals of this tool is that it should be open source, so that we can have continuous development of this solution, and that other service provider and data providers and homegrown solutions can build their applications around the code base that we are developing. It must be transparent, so that we can go from the corporate ambition all the way through to the temperature score and understand exactly how this has been calculated, which is essentially when it comes to the analysis. It needs to be data agnostic, so that you can use pretty much any data provider, or for that matter, your own data lake with your own data gathered from multiple data sources. You should be able to use this in any user interface, so on a Refinitiv or FactSet or Bloomberg terminal or MSCI for that matter, but also to integrate it into your homegrown decision support and portfolio management solution. As I said, it's a workflow tool for portfolio managers, CIOs, ESG and financial analysis and analysts and risk managers and compliance naturally, but you can obviously find loads more sort of uses for this tool. The development team, Nate touched on this, but it's basically the Science-Based Target Initiative members that's been involved in this is WWF, which is me and Chris in this case, and then we have colleagues from CDP, the World Resources Institute, and our developers in this project, which is Autic Finance and OS Climate. Those are the guys with the brains, who knows how to write code. Then we have also collaborated to various degrees with various data and service providers like Bloomberg and CDP, obviously ISS, Trucost, and Urgentum. We've also had input from the Net Asset Owner Alliance to get a user take on the development. So the solution that we are developing is a sort of a three-step process in a way. You have an input and an output. It's quite sort of self-explanatory. So you take a bunch of data. So this is the ambitions that the company set up, the time frame for those ambitions, the scope and coverage, and whether these are absolute or intensity emission reduction targets or not. And then we pass that into the part that we are building right now, which is the core code base, which is essentially a calculator that takes that input and calculates it according to the methodology that WWF and CDP developed, and then output this data into, for the beta testing, we have a number of ways of doing this. Dan will cover those, but they are both online and local and Python-based versions that you can use. But what we are seeing is that we have a number of data and service providers who want to build applications around this, and they will obviously take various forms, both for you to interact with the tool and with the data, but also to analyze it and get some output from this. With that, I think I'm going to hand over to Dan to talk a little bit about sort of the tool demo and how you can sort of have a look at that. So please, Dan.
Yes, thank you, Donald. Hi, everyone. I'm Dan van der Meijeren from Autic Finance. Yeah, so first foremost, as Donald already mentioned, we built this tool as a calculation engine that can be run on different platforms. So in the final version, it can be integrated in data and service providers, platforms, as well as a standalone solution. For the beta testing, it's available as a local standalone solution via Docker container or using Python. And for only this beta testing, we also have live versions running using AWS. Donald, can you go to the next slide here? Yeah, so to get a very quick overview here, you'll import some data, select options, we run the simulation, and based on those data, and then you can inspect the output and if need be, change some options and run it again. So I think best for me to just share my screen and go straight to the demo. And then I think, Donald, you have to stop sharing yours.
The screen should be yours now.
Yes, thanks. All right, so yeah, you can after installing the tool, or if you go straight to AWS, you can open your browser and go straight to the tool. So first step here is to import your portfolio. This should include, of course, things like your company name, ID, the company name, ID, license, and your exposure to each individual company. So I'll select here my sample portfolio I have here, and I can upload this. And next, I'll map all the fields to the correct data fields in the tool. And then we'll go to the next step, and that is selection of your data provider. So we envision this tool in the live version to be connected to all kinds of different data providers, so you can choose the one that you might have a contract with. For the beta release only, we'll focus only on Excel. So for now, I can choose Excel. I again have to upload my my Excel file. This time it's data just from the company and targets. Obviously, this has to be in a certain format. I won't go into details here, but we have a detailed inscription for beta testers available. Again, I'll upload the data and we're good to go. Next step, we can specify the options for the user to choose from. So we have the default score. You can play around there and choose some different options here. And again, some different aggregation methods as well. And then for the temperature score, we can select what kind multiple timeframes that we're interested in, multiple scopes, and as a default, we'll look at a midterm time frame and scope 1 and 2 and scope 1, 2, 3, as Chris mentioned before. Then you can choose some additional output options. So if you not only want to see the scores, but also some extra information. So for example, I can select my region and the sector for each company here. And then additional temperature scores filtered to certain categories. So again, I will select region here and I'll get temperature scores for each different region. So if I make my selection here, well, we can just go to the results. You can calculate scores and it will calculate everything. So I'll just go to the calculated ones. And here you see the temperature scores for each of the selected scopes, as well as some information on how that temperature score came to be. So we split it into the percentages that calculated based on an actual target and the percentage of the companies that uses the default scores. And additional information here as well on which companies are the highest contributors to that specific score. So I should mention here again that the data I'm using here is fake and just randomized. So second, next to the temperature score, we also calculate the portfolio coverage here. Yeah, so basically it's just all companies that do have SBTI approved targets here. And this section, the next section shows another set of temperature scores, but now for each individual category. And additionally, we show temperature scores for each individual company as well. So after you get this initial output and have inspected it, of course, that's one way to use the tool, but what we can also do here is help with the target setting. So for this, there are a few options available. First, of course, is you can play around with the exposure to the different companies and see how that affects the temperature scores. The other option is to look at some hypothetical situations. I get here. So, for example, what if all companies that do not have targets right now will have targets, and then we assume a certain score for those targets, maximum score for those targets. Or what if the 10 highest contributors to my portfolio would set, I can convince them to set actual targets. And again, assuming that it will result, of course, in lower scores. So I can again choose such a scenario and run the simulation again. And if I do that, I'll get a lower score here. Of course, because a lot of the 10 highest companies, contributors are now maxed at 2%, at 2% degrees Celsius. So finally, yeah, we can download all this information, so we can inspect it in the tool, but you can also have the options to download all this information locally. And here we have the option to download just these these fields that I have selected here, or to just select everything. And when selecting everything, it will just generate a CSV file. And here I have the option to do this either just regularly, or if you don't feel comfortable sharing that kind of information, of course, it's also possible to anonymize the data, in which case all company names, IDs, and an ISIN code, for example, will be anonymized or removed. So yeah, that's the tool in a few minutes. Donald, back to you.
Thank you. So let's get back to our sort of presentation. If I can find that. There we go. And if we can maximize that so you can see as well. Good. Great. So thanks, Dan, for that sort of quick demo of the tool. This is obviously what we're showing here is how the tool, what the tool sort of works like under the either the Docker container installation or the AWS Amazon Web Services online version of that. And there's pros and cons for using both of those. But you also have access to the Python code from GitHub, which you can download and play around with in whatever way you want. So the beta testing period now is starting from today, and it goes on until the 13th of August. What we showed today, I can't stress enough, this is a beta solution. And the user interface that you see here is not something that we spent tons of time in building, because what we see the most important part of this is that you get this integrated into your existing workflow. So this doesn't become a compliance tick box or something that you do once a year, but this can actually help you in analyzing your portfolios and drive your investment decisions. So this should be one part of your decision support. Therefore, we hope that a number of data and service providers will build applications around this, and that's why we reached out to a number of them to do so. So, but to make it easy for you to test this, we built the user interface for that. And the question is then, so why should you participate? Obviously, you get the early look into sort of an integrated sort of temperature rating solution that you can integrate into your investment process. And you can get a better understanding for the methodology and the tool before we release it, and we in the full version. And the full version release is scheduled for September this year. You also get sort of heads up to prepare for using this tool for EU disclosure regulation. I saw some question in the Q&A coming up around that. I'm not 100% sure that I answered that correctly, but you should be able to use this tool in helping you to fulfill those requirements in that EU regulation coming up in March next year. Naturally, also participating in building an open source solution for temperature ratings, which is a nice thing to do. So what do we expect from you? This is obviously a voluntary beta test, and you may do whatever you want with it, so to speak, but we would very much like to see you test this tool in either of the 3 versions that are available, the Python version, the Docker container, the raw Python version, or the Docker container, or the AWS version, on a range of equity and bond portfolios across regions, sectors, strategies, and hopefully you will be able to report on sort of things like ease of use and performance, data input and readability of output, and how useful this is actually for analyzing your portfolios, but more importantly, to set targets, because that's obviously the end game here for us all. So, and also we would very much like to see if you can share some of this sort of the types of securities you have tested, even if you don't want to share the actual securities, the types of options that you've chosen in the tool and the results you get from those options. As Dan said, you can anonymize the holdings, and as we provide total transparency into the data that you share, you can obviously see exactly what type of data you share with us. And finally, and very importantly, participate in the online survey. There will also be an offline version if you can't access the online version. As support, we have set up a Microsoft Teams group that you can register for if you want, and that obviously includes both support and feedback, but also maybe even more importantly, discussions with both the developers and other beta testers around this tool and around obviously the subjects as a whole in terms of temperature rating. As a backup for that, we do have email support and feedback options as well. So this is just a list of data that you would need in order to participate and be able to run this. So you obviously need portfolio holdings, and you need the reduction targets, as you can see here, including sort of what type of target they are, the coverage, the ambition, start and base and end years, GHG, greenhouse gas emissions per scope, and industry classifications and sectors are sort of optional. That depends on how you want to slice and dice your results there. For aggregation purposes, on a company level, revenue, market cap, enterprise value, total assets, and cash and equivalents are recommended as well. So we are obviously collaborating with a number of data providers for this purpose. So there are contact details in a document folder that we will share with beta testers. So you can get in touch with the data providers that are involved in this project, and they can help you with sort of using their data, obviously, for this tool. If you don't have that access to any of those data providers, there is the dummy sample data, which is totally randomized data, but at least you can get a feel for how the tool works and sort of take it to bits and play around with it. That was the data that Dan was using today. So to sign up for beta testing, use this link, this MailChimp link, which we will email you after the webinar, and it's included obviously in the slide deck as well. With that, I'm going to hand over to Shandan, who's going to talk a bit about our guidance for this science-based target.
Thanks, Donald. Before I start, I would like to pause for a couple questions for our panelists. So we've received a couple of really good questions. And the first two are for Chris, if you're still here, Chris. So the first one is, how are you using emissions intensity targets to convert to a temperature rating, given that temperature changes are based on the concept of an absolute carbon budget that intensity targets ignore?
I wouldn't say that intensity targets ignore the absolute carbon budget. Like the scenarios upon which all all science-based targets are based have multiple parameters, including absolute emissions and also physical and economic parameters, such as tons of steel, megawatt hours of electricity, and economic growth like GDP. The intensity targets are simply benchmarked to a intensity benchmark from the scenario. So like a revenue or value added intensity target would be benchmarked to a CO2 per GDP benchmark in the method. This doesn't ignore the absolute carbon budget. The absolute carbon budget still drives the numerator and to a lesser extent the denominator of the benchmark. It's just using an alternative benchmark.
Okay, great. Thanks, Chris. And the second question for you is, do you use the IPCC 1.5 concept directly? And if so, how? Or do you go via scenarios like the SDS of the IEO?
The scenario set is entirely based on the internally consistent scenario set used in the IPCC Special Report on 1.5. We have not included IEA or other kind of industry-based scenarios for a simple reason, which is that they don't usually extend to 2100. So it's not possible to assess with any conclusivity what temperature outcome, say, the SDS will lead to. You can do that by aligning it with the IPCC scenarios that do extend to 2100, but we haven't done that. We haven't done that yet. We'd prefer to just use the IPCC science directly.
Great, thanks, Chris. And I have two questions here for Donald. So the first one is, it was mentioned that the tool can be used for listed and unlisted equity and corporate debt portfolios. Does this mean that the tool can be used for assessing the Paris alignment of small and medium companies too?
I would say it depends on on the data, I mean, the fallback option is obviously always the default score, and how we sort of calculate that, depending on what kind of methodology we use for that. But if the data is there in terms of targets, and if we do have sort of emissions for those companies, then there's nothing stopping you for doing that. I mean, in fact, you can put pretty much whatever assets you want into this tool in order to do that. However, I think it's most likely that it's going to be most useful for listed equities and corporate bonds.
Thanks, Donald. I think the next question is somewhat related. What if a portfolio company doesn't have neither footprint calculated or target, for example, for their scope 3? How can they be included into this tool? Any estimation methods available?
I think, can I pass that to you, Owen, maybe?
Yeah, happy to take that one. So first of all, if a company doesn't have a specific target covering, for example, scope 3, then they can use the default score for that approach. So we do have a default scoring approach that can be used for any companies without targets or without targets covering specific scopes. So that can be used in that case. And then if there's no reported emissions data for the company, then you would have to use some form of model emissions data. So various service providers do have model emissions for many companies. If there's no model emissions data for a company, then it would not be able to be included in the portfolio assessment.
Okay, great, thanks. So we will also have a separate Q&A section after the presentation on the guidance. Yeah, so I'll be shifting back to the other key element of the SBTI 5 framework, which is the financial sector science-based targets guidance. Next slide, please. So the guidance really ties the criteria, methods, and the tools together, and it's really meant to be this one-stop shop to support FI's target submissions to SBTI. So what does it include? It includes business case for setting SBTs and detailed guidance to use the criteria, methods, and tools to prepare for a submission to SBTI. And also case studies from global financial institutions on how they have applied various target setting methods included in this framework. And as well as recommendations on steps that FIs can take to achieve their targets after their targets are approved. And lastly, recommendations on communicating targets, as well as communicating how FIs aim to reduce emissions in the real economy through the steps they plan to implement their targets. Next slide, please. So more specifically, I've included the outline of the guidance here. So the guidance will be structured around the order of the financial institution criteria for the target validation. So here we start with the basic concepts of a GHG inventory, and then we will go into how to set targets for your scope 1 and 2 emissions, and then the scope 3 portfolio SBTs, which we will talk about the different methods. So there was a question about whether SBTI will decide which one method FIs can use, and the answer is that FIs can select the methods that they see as fit on their portfolio, and they can use multiple methods that we include in the framework on their portfolios. And then next, we will discuss the disclosure and phase out of fossil fuel investments. And we will provide detailed instructions on how financial institutions can commit to SBTI and submit targets to SBTI, and then how to achieve targets, how to communicate SBTs, and then also discussion and areas of further research. So we will be releasing the draft guidance 2 weeks from today on August 6th. And with the release of the draft guidance, we will share a brief survey on some of the key questions we would like to get your feedback on, including on some of the key criteria. And then we will be accepting your feedback through August 27th. Yep, that's it for me.
Great. Thank you, Chandan, and to all the other presenters we've had today. It's been a lot of information. We've gotten a lot of good questions. Before we go through next steps, I didn't see any questions on the guidance particularly, but of course we would welcome those if any of you have them. You're welcome to put them into the Q&A box. In the meantime, I'll just go through some next steps before we broaden this to the bigger discussion. So the remaining milestones, as Donald described, we're opening the beta testing today. That's obviously one of the major purposes of this webinar. And we'll have it open for 3 weeks. And then as Chandan mentioned, we will be sharing the guidance 2 weeks from now for another 3-week feedback process. And we hope that all of you will take a look and provide feedback on both of these products. The purpose of this is to complete the framework that we'll publish in September, likely during New York Climate Week, which will be virtual this year. And the whole idea is that this will serve as a foundation for financial institutions to develop targets for their investment and lending portfolios, which the Science Based Targets Initiative will then assess, and if they meet the criteria, approve and post to the project website. The next slide shows just some opportunities for participation for all of you in terms of if you're not already on our project stakeholder list, we welcome you to join. That's a very popular list. From our perspective, it has about 1,000 people who have signed up. We always welcome more. Participating in the beta testing, as Donald described, is obviously something that we would like all of you to do. We welcome you to join that. But also, if you want to read the draft guidance, that would be great. And we will be circulating the survey with that, as Chandan mentioned. The next slide just closes this out and opens the Q&A. So I know we've gotten about 30 questions, so that's great. Chandan, do you want to identify some that we should start with?
Yeah. Let me read through them quickly, or
sure, I can.
Tell us if you see any question that you'd like to answer.
Yeah. So some of the earlier questions were around the methodology for Owen or Chris in terms of the reduction target data. I think, Chris, you covered this with absolute versus intensity approaches, so that's fine. What if the portfolio company doesn't have either footprint calculated or target? How can they be included into this tool? So maybe you could just talk about the default scoring a little bit and some of our thoughts there.
Yeah, so there was two different parts to that question. Essentially, what do we do if a company doesn't have a GHG profile, and what do we do if a company doesn't have targets? And those are two different things. If a company doesn't have a GHG profile, it can of course be estimated. This is, you know, standard practice in portfolio carbon footprinting, and generally, you know, most ESG providers do this as a matter of course. So the estimated GHG profiles can be included just as easily as recorded ones. I don't think we would suggest ever estimating a target, because I don't know how you would do that. And second, like, I think that the whole point of this method is to rate companies on their publicly disclosed ambition, and kind of estimating like a target would potentially compromise our theory of change here, which is that we're trying to incentivize more companies to set GHG reduction targets.
Thanks, Chris. So we have a few questions on banks, impact investors, and sort of the role of this target. I mean, it is intended to address to help guide engagement. Both of these targets, as Chandan mentioned, are the users can choose which method they're using, but both the methods included in this tool are engagement-oriented methods, which is, as Chris mentioned, sort of part of the theory of change here in terms of how SBT initiative can support low carbon transformation in the financial sector. Chandan or others, have you identified questions that you want to address now? Mm-hmm.
I saw some questions on the weighting approaches and just more clarification on that, you know, how companies' scores will be weighted on the portfolio.
I'm happy to answer that one. So at the moment, we have a series of different weighting options that we have developed that are all included within the tool for testing. So these range from simple greenhouse gas weighting to also more, I would say, complex weighting options that are based on kind of an ownership approach within the portfolio. So we have various options based on enterprise value, market cap, revenue, total assets. So at the moment, we're still looking kind of for feedback on what would be the most appropriate weighting option to use for this portfolio step. And all of those will be included as part of this testing. So I think that's definitely an area that we would like feedback on during this beta testing as well.
And one thing just to mention, thanks Owen, that was a great answer, is, you know, we do have sort of directed questions through the survey and sort of things that we're curious about in the beta testing, but it's also an opportunity for you just to provide feedback, requests, suggestions more broadly on the tool that we're developing here. So we would certainly welcome all of those from many of you.
So there's a good question that's related to the criteria. In terms of coverage of scope 3 targets, would it be the same? 67% is a minimum scope 2 target. So this question will be answered in one of the criterion in our criteria, which will be in the guidance that addresses the coverage of portfolio targets for a financial institution. And we'll be presenting some options for your feedback in the guidance.
So I see there's a question on the default temperature scoring with regard to the sector of the company. And this is a cogent point, and it's one that we are planning to add additional granularity in terms of sector default scores, but those aren't implemented in the beta version that we're sharing today. This is something that may be informed by further method development and other publications, for example, the IEA's ETP 2020, which we're expecting in September.
I also see some questions on how this tool can be used and by whom. So there was a question of whether philanthropy organizations can be included as a user for this tool, and also whether companies can use this tool on their suppliers. So maybe something good to clarify.
Yeah, I can take the part of that. This is Truman Siemens. So Donald emphasized that a primary set of use cases are around workflow for ESG analysts, asset managers, asset owners. Additionally, the tool will be usable for a range of different engagement, both by asset owners and asset managers, to the aim of getting more companies to set targets and get on track to Paris alignment. However, the tool will also be available and usable by others involved in engagement, including philanthropic and NGO organizations.
Thanks, Truman. I see another question here from Karen on if you are reporting, for example, on a green loan product or a green bond, can these be reported as zero emissions, the way the emissions have been calculated? So thanks for the question. Generally, the SBT initiative doesn't include any avoided emissions in its target formulations or target achievement. We are planning to have phase 2 work focused on net zero targets for financial institutions, but it's not explicitly addressed right now, and we wouldn't be doing a zero emissions assumption there.
There's another good question from Peter. Do you treat debt versus equity instruments differently in your assumptions, given their different perpetual versus time-bound characteristics? Donald would like to take the question.
I can answer that. Hi, Peter. It's Donald here. No, is a simple answer to that. Not currently. So we treat them all equal at this point. But it's obviously something that we could develop further, and that's one of the reasons this is an open source project, so that other people can pitch in and continue to develop this alongside and SBTI and other people who develop it.
See a simple question, is the tool also for bank lenders? Yes. We have had a lot of consultation with investors, asset owners, and some asset managers, but we certainly include banks as part of the audience here and seek for this to be useful for bank lenders as well.
So there's another good question. If current methodology doesn't cover net zero targets or procurement targets, does it mean that in this case, companies will have to apply default temperature scores in this case?
I can take that question. So at the moment, yeah, if they do not have a midterm greenhouse gas emission reduction target, then they would have to apply the default instead. So we do not currently recognize renewable electricity or procurement targets, supplier engagement, or net zero carbon neutrality targets that have to be a particular absolute or intensity-based percentage reduction target.
Thanks, Owen. And we're just about out of time, but I think a good question to end on is the one from Gemma. Do you know that the tool will generate real impact on emissions in the real economy? This is obviously a big debate within the financial sector in terms of quantifying impacts. the SBT initiative seeks to reduce emissions in the real economy, but we're also cognizant of the lack of data and evidence out there. And so the criteria that Chandan mentioned will include reporting criteria on the actions that financial institutions are taking to achieve their targets, which is the main extent that we feel we can really influence this in a transparent and robust way. So this is something that we do expect to be covered in the guidance document, but it's an ongoing conversation, and we certainly welcome all of your feedback on that. With that, maybe Donald, we can just go to the final slide, and I think we're just about out of time. So thank you to everyone for joining, and we hope that all of you will participate in the beta testing and provide feedback on the guidance, and look forward to hearing from all of you. Thanks again for joining, and have a great day.